Hey guys, I hope you guys are doing well. So today we're looking into Shopify and I'm going to be telling you 5 good reasons why you should avoid this stock, even though it dipped from, here we can see it from about $1,700 to $656. Okay, so let's begin right away. If you go into financials, this is one point I want to point out before we start, is that yes, the revenues have been growing consistently quarter over quarter, but this is not enough. We're going to see why you should still avoid this company. So this is the operating margin from 2017 to the current date, and we can see that it reached a peak at 12.5% a few quarters ago, and we can see from there that it's been decreasing like pretty significantly, as you can see here. So from here to here, that's like an 80% decrease in operating margin, and here the last quarter it's a 1% operating margin. So okay, the revenues are growing, but like this is still like, this is significant. Okay, this decrease is significant. All right, so for the second point, we're in the income statement, and if we look at the evolution of the earnings, we can see that in 2020 Shopify just got profitable, and then in 2021 the earnings almost 10x. And if we look at the reason for this growth, well, really small part of it is the operating income that doubled from 150 to 300. But the main reason is here. You can see it. The interest expense really is the main reason why the earnings 10x'd. Now, if you look a little deeper as to what is this, well, we can see here that Shopify made an investment into Global E for an amount of 1.165, and this is 1/3 of the amount that comes from the unrealized gains. The other part comes from mainly private companies, investment in private companies. Here again, it says the company made 3 separate investments totaling $375,000 in private company. So what this ultimately means is that the big boost, the big growth in earnings that Shopify saw in 2021 doesn't come from the main operations of Shopify. It comes from the investment that it made. And this is really not good to see for investors because, first of all, here, these are private companies, right? We don't have access to the financial statements of these companies. So for us to evaluate if those investments were good or not is really difficult. And this adds a lot of risk and volatility to our decision as to should we invest or not in Shopify. The other point here, Global E is publicly traded and it's accounting for a good amount of the unrealized gains that we saw. So I looked a little closer and here it is. First of all, we can see that the stock peaked in 21 August 30 and it fell down 50% of its value. Second of all, we can see here, without going too deep, that it's not going well for this company. The earnings are really plumbing, and that's mainly the reason why the stock lost about 50% of its value. So what I'm seeing here is that Shopify is really dependent in part for its earnings for this stock's performance, and if it's not going back up or anything, well, that's gonna hurt Shopify's earnings like badly. All right, so for the third point, this is the net common shares that has been issued by Shopify. We can see that they've been diluting their share for many years now, especially in the last 2 years. And one thing I want to point out is that yes, Shopify is a growth company. We saw it in the beginning that their revenue, their sales has been growing quite regularly, consistently. But the thing that I want to point out is that the company here, if you look at the balance sheet, if we calculate the current asset, the current ratio together, so we took the current assets and we divide them by the current liabilities, we can see that Shopify has a current ratio of 12. So it has really no difficulty in paying their short-term debt or obligations, right? And me seeing this here, that they've been still diluting in order to finance their projects, well, this does say something, right? If a company is overpriced, overvalued on the market, then it's more beneficial for them to issue shares, right, to finance their projects, because the cost of equity is going to be less for them than if they went to the bank to borrow money. This is like, just think about this, guys. This is like a sign, for me, it looks pretty obvious, especially looking at like a current ratio of 12. They could have easily just finance their project with some debt, but they chose to take to issue more shares to raise capital. So just one thing to think about. And other than that, well, obviously, yeah, diluting shares is pretty red flag, especially the fact that they've been doing it for a while. So that was it for the third point. Alright guys, so for the fourth point, we are in Amazon's latest quarter earnings, and why we're talking about Amazon is because Amazon's web service is one of the big competitor to Shopify's business, right? And what I want to point out here is that the net sales for this segment of Amazon has been growing pretty rapidly, I want to say, if I can speak, and and the operating income as well. So we're not here to talk about Amazon's, right? But the point is that the more this segment increases for Amazon, the more it grows, the more market share it's going to be stealing from Shopify. And if it continues to grow this fast for Amazon, this is going to seriously hurt Shopify in the long run. So this is something to keep in mind, and one of the reasons why I also am seeing this as a bit of a red flag for Shopify. Alright guys, so here we are with the fifth point, which is basically the post-pandemic effect on e-commerce businesses. So as you guys know, with the lockdowns and everything, most of the people were starting to buy online, and now that the restrictions are being lifted and the COVID pandemic is it's getting better. Well, people are going back in stores to buy their needs and everything. So this obviously has a big impact on Shopify, not only Shopify, but like other e-commerce businesses as well. This might not be the strongest point in my list, but it's still a point to consider. And that was it, guys. So thank you if you stuck till the end. I really appreciate it. And if you like this content, like, subscribe, and comment, and I'll see you on the next one. Peace.